What's up, guys? In the last video, we learned about uptrends and swing highs and lows. Now in this video, we're going to continue off of that, so if you have not watched that video, go watch it right now. We're going to continue and learn how we can use that information that we learned in the previous video and how to identify when the trend has changed and flipped before you see the entire thing. And to identify that, we use a concept called market structure shifts. And before I can define this, let's go back a little bit. So as you guys see here, I've created an uptrend. So this is what an uptrend would look like on a line graph. And if you guys practice, you should know that these are our swing highs and swing lows in this uptrend. So I have them all circled out. So the market structure shift, which is abbreviated as MSS. So if you guys ever see anybody refer to something as MSS, that is a market structure shift, is one of the earliest signs of a reversal of a trend. So how do we actually see a market structure shift? Well, as you guys know, swing highs and swing lows. What can we do? Mark out the swing highs and swing lows. That's the first step. So in a trend, we'll have swing highs and swing lows formed right here. So you guys see swing high, swing high, swing high. Now, a market structure shift occurs when we break past a swing low in an uptrend. So right here, as you guys see, instead of making a new higher high, we make a lower low. And we only look at the most recent swing high in this scenario. So right here, that is an indication of our market structure shift. And then let's say we start trending downwards. So now we're in a downtrend. As you guys see, we're trending lower and lower. And then we suddenly form a higher high instead of a higher low. That indicates our market structure shift. So right here, we would mark that out as a market structure shift. Now, before we go on to the chart, I want to mention that it is best to look for a market structure shift after price is tapped into a key level. So for example, that could be a liquidity sweep. So if we had this low right here, for example, let's say we swept this low down here, then we could look for a market structure shift as an indication that price is reversing. And then another thing is, you do only want to look at the most recent swing low because it won't really matter if we trade up to here either way, because we've already shifted market structure here. Therefore, there is no point to class this as a market structure shift because we already have one down here. Okay, so let's get into some live chart examples of how you'd use a market structure shift. Alright, so I love this example right here. I have this indicator on just for ease. It is called market structure shift by Sword and Shield. So what do we see here? And I will mark out in horizontal ray exactly where we're looking at. Right here is the only thing that we want to look at. So within this box that I've marked out, there is a play that we could have made. And what is that? Well, right here, as you guys see, first off, we have a sweep of liquidity, which is what we really want to be paying attention to if we're looking for a market structure shift. We want price to reach into a key level before continuing. And not only that, we have this high time frame fair value gap that we tagged into. So that gives us two confluences already. The third one that we would want to wait for is a market structure shift. So we trade up. This is our recent swing high. This is not classed as a swing high right here because again, it doesn't stick out. So this is our swing high. And once we cross that point in price and close, that marks our market structure shift. This is not that good of an example though, because we do reverse right after the closure. But after that, we do continue higher without shifting structure to the downside again. So let's go look at another example. This one is now on the 15-minute. So if we go here, we can mark out this box. So what do we notice in this move? I'll let you guys look for a few seconds before I explain. So if you guys first notice right off the bat, we do get a sweep of liquidity, both here, and then we also do get a stop rate up there. So I'll just mark both of those out right there. And then what do we see? Well, our most recent swing low is right here before this move up. And prior to this, we were moving in an uptrend. As you can see, market structure was bullish because we were making higher highs, higher lows until we made a lower low. We broke past here and then we continued down. And then as you can see, this market structure shift was the earliest indication of a reversal. What could we have done? Well, there was this 15-minute gap right here. And then you could have easily taken shorts off of this, stop at the top of the liquidity sweep, and then your targets could have been at any of these lows. Right there, or these equal lows right here. Let's go into one more lower time frame example before calling the video. So right here is the example on the 5-minute. I'll mark out a range. And there's one main particular market structure shift that I'm looking at. So I'm going to turn off the indicator so that I can narrow it down to only one. So first things first, what do we see? As you guys see, prior to this, we were kind of just ranging. We have this swing low right here. What do? We sweep that low, and then we immediately react. Now, what does that indicate? That indicates that may have been a liquidity sweep. So what do we want to wait for? We want to wait for our market structure shift. So before sweeping liquidity, where was our previous swing high? If you answered right here, you would be correct. Because this high right here sticks out. These highs are just internal. They're not swing highs, they're just highs. So after price closes above this, and that's another thing, we do want to wait for a full candle closure before classifying it as a market structure shift. We get our market structure shift, and then we can look for a potential entry. So somewhere you could have entered off of here could possibly have been this IFVG. As you guys see right here, we have this IFVG play. And then if you want to enter off the market structure shift, could have entered at that candle right there. Stop a few points below the IFVG. Right here would have been good. And then target at whatever highs you want. And as you can see, full TP would have ended up playing out. And that is all there is to market structure shifts. So go practice them on your own charts. Go learn how to identify market structure shifts. And I'll see you guys in the next lecture.